TGIF, everybody. How's it going? We started at 5, Andre. Welcome to FACE if this is your first time. TGIF stands for Thank God I Found ForexAnalytix. So, thank God I found FACE. How you doing, Humphrey? You Eagle, you? Brock, how are you? Alexander? Who else is around here saying good morning? Hi, Marco. Paul, how are you? Okay. So I would say that the surprise of the week, most likely, you have to say was the dollar recovery. No hangover, guys. Okay. Hi, Laura. Okay, so Tuesday, turnaround Tuesday trade was shorting euro up here, 22.60. So I would say that this was a surprise. And I still think we're headed lower, that we could take out this 21 level and maybe even trade down towards a lot of confluence around 120 on the daily with the 50 and 200 day. 2050 was my original target, 2050, 2070. Nothing wrong with taking it here over the weekend. I think the yen surprised people. It put everyone to sleep and then exploded. Aussie was not a surprise. Blake's been pounding the table with Aussie weakness and using it in his cross trading. Hello, Jatin. Yeah, I had a nice quiet birthday. You know, I know what I'm not missing. Don't forget, I grew up in the 60s and 70s, right? So, plenty of sex, drugs, and rock and roll for me. Hello, Monica. How are you? I'm a responsible senior citizen now. Hello, shalom, Amira. All right, so and Grega was on yesterday, so we're setting up this Aussie for a move towards 76. Right around these lows in here. I don't think we're going as deep as 75, but we'll see. It's really been the weak sister. Almost looks like you could have something like this from here that's going to give you 60, but I think it's going to be a great buying opportunity. Like I said early in the week, I'm not declaring a dollar bottom, although you got to respect it. Look at this. I think we're actually having a reversal week in Euro's 10 away, but yeah, there's your reversal week in the Dixie. So, I mean, how much more do we have? And, now people are thinking maybe we're not going to take out this low. Still think we will. Probably looking to short the dollar, maybe up around the 91 level. Maybe there's another 80, 91 is going to be pretty important. This low right here was 91.70. I don't know if it'll have enough juice for that. And, maybe I'm wrong and this is a dollar bottom. Anyway, looking at some of the other markets, I got clipped in the oil. Tried it a couple times. Second time wasn't as bad because I took partial profits when I sold it in here, and then I had stops at 50. So Grega was talking in the 70s. You come in after a week like this, you go, oh God, I got to sell retracement. Anyway, it's not always easy. And Bitcoin, the guys have been saying, unless we close back over 42, which it has not been able to do, we'll see. 36 was my target. That's where, we've taken that out. That's where we're trading around. But, some people do have counts lower down towards 20. 10-year, this is really going to be important in the upcoming days, is which way comes out of this rectangle. right? I don't think that we get a big ease in it until we have some risk off. And the S&P's decent week again. I pointed out this 4185. Well, 4185 turned out to be very important, didn't it? Remember, I showed this on Monday, showed this horizontal support resistance line before we had any tests. And as long as we hold it, the measured moves up around 4330. I actually think we have a chance to get to Blake's butterfly target. That's up around 4370. Oh, yeah. And many times it has lagged the VIX. Okay, I'm not sure. Daily chart of VIX. Yeah, I don't see anything there yet on VIX. So, maybe we're going to 15 again. And just like that 4185 is the swing pivot for S&Ps now. I mean, if we take out 4185, I don't think you want to be long. And same here with 19 on VIX. 19, you're above it. You have a chance to rally, held it, bounced back underneath it, tried to rally above it, underneath it. So at least um, really where the pivot is in VIX. As long as we're under 19 until I get towards targets, I can't do anything about it. And I think that's about it. Silver, I really had, a crummy week. And, this could be considered on the verge of a daily, weekly breakout on the gold silver ratio. The 68.5 level, we're right there and having a pretty good follow through week. Even if it's a bear market rally in ABC, there looks like there's still some left up towards 75, which is going to make gold your preferred long and silver your preferred short. And it certainly shows up on the chart. Even today, you have silver down 1%, gold down 0.4%. So, when you're bullish, the metals, you buy the gold. When you're bearish of metals, you short silver. And I hope everyone had a good week. Who had a good week? Anyone catch alongside the dollar? Short side of euro, short side of Aussie. Has Face helped you make money this week? Anyone? I know Face helped me make money, so it's hard to believe that. Okay, Ferdinand, nice. Lower your leverage if you're making 50% a week. That's the first thing I think about. In fact,
that's all I said.
You too,
That's
Blake?
exactly what I was thinking. I'm like, oh crap, you're gonna blow yourself up.
Yeah. Right. So you know what? Pull some equity out of your account and lower your leverage. We want you to be okay.
Right.
Okay, you only risk 5%, but that's been a pretty high risk for your account. Let me ask you this, for Ferdinand and John.
That's
I don't
funny.
know if John, you're
That's
hammering
funny.
the Aussie. Peel off a little. You know what a good hedge for you would be? Are you in a community, or are you trading on your own in a capsule and just running around to free rooms? Because yeah, I really recommend you hang out with some pros in our members chat, become a subscriber. We'll cut you a deal, Ferdinand. And anyway, congratulations on that, but just be careful. Blake, you know what I tweeted, I talked to Schwager the other day, and he said, I said, I wanted to know how long it took the Wizards to, become proficient at trading, or at least make a breakthrough. And he had the same kind of answer. He said about 4 years, and he said, yeah, he goes, trading is the only thing out there where you have a 50% chance of being right every time you do it. So people think they could read a book over the weekend and then just open an account and start trading. And he said that's like someone reading a book on brain surgery and then thinking they could go in and perform it on Monday.
Yeah,
So,
you know,
you know,
it's pretty amazing. I've been around the block obviously a few times, and my latest stint with trading with the Gellis group has been probably for me, it's been one of the best experiences because of my breed, or lack of breed, if you will. And that's the one thing that I try to express to you guys, that when you didn't grow up trading for a
Rich.
bank. And
Oh
I
yeah.
say that, I say growing up trading for a bank because, as if you look at like my career, which is, starting as an independent trader back in the 90s, and, making a killing during the .com, totally lucky because I was in my late 20s.
You mean you got to avoid all those cold calling years?
No. I spent actually a year and a half being a stockbroker.
All right. So
And
yeah.
I dialed 300 dials a day. So
Wow. Yeah. That was fun. I
that
think I'll
was
work the
fun.
B's today. No, the D's.
If you guys have ever saw what's the movie,
Boiler Room?
A Boiler Room. Yeah. Even though our firm, we followed like the
Compliance.
no, we followed oh God, now I'm trying to think of their names.
Blinder and Robinson.
No, do you know the guy that's on CNBC? He's been on CNBC for 35 years. He talks like this, so when you hear him, you're like,
oh, I know who you're talking about, and I can't think of his name.
Asset manager that's actually on CNBC for the last 30 years too. Big hedge fund managers. We used to follow them. So, but I used to cold call, and it was a lot like Boiler Room. I mean, and to get myself excited, I would actually stand on my desk sometimes, because that's the way we used to do it. I mean, it's like, you call people, and it would be 4 o'clock in the afternoon here in Arizona, and I would be calling people in Hawaii because it's the only time, legally we could call people because it was early there for them. Anyway,
I'm sorry to bring up that memory.
Yeah, no, it's the beat down.
I get up Saturday morning at normal 5, 6 in the morning and start cold calling on the East Coast.
Yeah,
and not finish till 1, 2 o'clock on the West Coast.
Hey, that was the job of a stockbroker, and but as a trader, I like I said, I got really lucky being long, some .com names through the 90s, and that's how I got started in my career. And so when I say one of my best experiences were the last 5 years was trading with guys that trade size. When I say trade size, they're trading $1 million to 5 million in currency every whack, and that's not bad for when you're you trade the euro, you make 100. If you're trading $1 million in currency, you make 100 pips, you're making 10 grand. But the swings are bigger, obviously. I would get into a trade, and I could be upside down 15 grand pretty quickly on a $2-3 million position. And that's just the kind of size that we were trading for the last several years. And it really was a learning experience for me because like I said, I didn't grow up trading at a bank, unlike Stelios. Stelios worked at Barclays and traded banks books, so the numbers don't seem so big when you're already used to working with exaggerated number sizes. Even in my biggest trading days for myself back in the late 90s, early 2000s, I mean, I was trading 1,000 shares of Microsoft or 2,000 shares of Microsoft or whatever. So my swings would be, if I lost, if I took a loss, it would be like a $1,500 loss or maybe a $2,000 loss. And my gain might be more like a $3,000 or, $3,500 gain. So it wasn't like the numbers that I was just putting up over the last 5 years. And I'll tell you, with that experience, the tough thing is sitting on positions, because when your P&L is fluctuating, 10 grand throughout the course of the day, it's tough, because that's a mental mind. I can use a whole bunch of 4-letter words there, but it really is a mental mind. The way it affects you, and it really affects your sleep. I was talking to Chi in our chat room, and he just opened a restaurant. He's been in our chat rooms for 5, 6, 7 years. I've known him for, I met him in New York, a few years ago, and in person, and with a lot of the other Forex Analytix traders, we have, pictures and stuff with it. It's really cool. But I was talking to Chi because he just opened a restaurant in New Jersey, and him and his wife, and he's an ex, Morgan Stanley guy. And he's like, dude, I didn't know it was affecting you that bad, for trading. I'm like, yeah, because, when I would sit in a position overnight, I would literally wake up and I could be down 20 grand or up 20 grand, by the time I wake up. So the amount of sleep that you get when that's going through your mind, every night, it's, weighed on me pretty heavily. I spent I want to say the last 5 years probably sleeping realistically like 3.5 to 4.5 hours a night throughout the week. And I don't think my body could deal with that much longer. And that's, the reason why I decided to hang my hat up and just start trading my own money, because it's much easier when you're trading your own money than, when you're trading somebody else's and you're responsible for it. That's something that I wasn't willing to do that to myself anymore, physically. And so, I was talking to him about that, and he's like, yeah, I get it. Because when you're trading a bank's money, when you're trading banks' balance sheet, right? It's a bank. It's an institution. You don't really care about it so much. When you're trading, like for me, I was trading, a couple guys cash, and I knew them well. Like, when you're trading their money, then you become more really responsible for it. You know what I mean? It's not just random, it's the bank's money. Who gives a crap? It's the bank. It's a damn bank. They're you're just willing to take on risk. But when you know the people, yeah, it's a whole different ball game. And it really, I tell you, the last 3 months that I've been trading on my own, it's been great. I mean, sleep wise, oh man, of course, the gains aren't as great, but the losses aren't as great either. So it's really been, but it's been, man, I'll tell you, Dale, there's nothing like closing my eyes at night and sleeping for, 6, 7 hours and waking up and going, wow, that was nice. What I mean? Yeah. Anyway, so I thought I'd share that news with you, or not news, share that with you guys, because I watch people take on this exaggerated risk in the markets, and it'll end up weighing on you. And heaven forbid you get on the wrong side of that, and because you will, I can guarantee it. At some point, you take aggressive risk, and it's going to come back and bite you in the ass so hard, you're not even going to be able to see straight. So I want to show you guys the euro dollar. The euro dollar is below 121.55. This is pretty key support. Now, I want to point out that it is end of month, and we are at levels that Monica said is a sleep risk ratio. Very true. Very true. So the euro dollar is at pretty key support here. We've broken an uptrend line. We've talked about the risks of that happening this week because of the false breakout up here above the 122.50 level. That has been a looming risk all week. But before you get too terribly excited about any downside in the euro dollar, remember we are at end of month. All right. And we're already seeing the dollar Canadian actually reject what I would consider as triangle resistance up here. Now, this is, I want to show you guys, this is a all of 2021, actually. You see this nice channel we were following in 2021. Then we broke below earlier this month. Notice how we're probing that trend line again. This is really critical. Unless the dollar Canadian gets above 121.50 right here, I have a really hard time believing that we're turning. Obviously, the divergent relative strength is telling us, hey, you know, that's obviously a risk right now. But man, you got to be really careful being long dollars as you see pairs like this, you know, struggling to break out. And then, you know, you take the Aussie is at key support. Let's not forget, this is something that we talked about yesterday, and I'm gonna say this, and I want to make sure you guys all hear it. Look, the Aussie dollar has been underperforming risk for a long time. It is really on the verge of crapping the bed and really just selling off aggressively, or stocks are going to rip higher and we're going to rip to new highs, and the Aussie is going to be forced to jam higher towards that 78, 79 cent level. So I would be really, really careful if, you know, you're trading the Aussie, especially being on the short side down here. I've obviously highlighted the weakness of the Aussie for quite some time, but I'm not expressing it through the Aussie US dollar right now. It's not, to me, it you know, if you throw what was I going to say? You throw you know, get the dollar out of the equation here. The better way for me to play it right now has been the Euro Aussie. I've been long this thing for the last, you know, you guys know I've been long this thing for the last week and a half. I just actually pulled some of it off this morning as we were back up at 158. And if you're in the chat room, you knew I took some of the profits off that I've been sitting on. But you know, like you look at pairs like the pound Aussie, there's better ways to express Aussie weakness than being long the you know, or excuse me, short just the Aussie dollar. So the Aussie dollar, just realized we are on some pretty key support here. And these are the days, especially you're talking about end of month, a lot of flows going through. So when you see a move taking place and you see it happening, there's a lot of times you probe like support and resistance levels kind of aggressively, kind of trick you to get in. And then as the fix comes, you know, we could see some dollar selling coming in too. So anyway, that's just like something that you have to be really, really careful about, especially as we head into month end. That there are a lot of flows that are taking place, and I can guarantee you at home, you're listening right now, you do not have enough money to combat the flows that are coming through the market, through bank flows that are coming through. As independent traders, we have to be really careful. We'll get run over like a freight train. So if you miscalculate or you happen to be on the wrong side, so you just got to be very, very nimble. Don't it's okay to be wrong. These are the days where you have to remember this rule. It's okay to be wrong. It's not okay to stay wrong. So if you're in a trade and it starts working against you on a day like today, where there's a lot of end of month flows, it's easier to just cut your loss short and just say, okay, I made a mistake, than try to stick with it. Because man, if flows get pushed through the market, like let's say, I'm just going to use this as an example, and then I'm going to pass it on to Steve and Stelios. I want them to provide some thoughts here if they want to. Like, let's say you're looking at the Aussie and you're like, oh man, this thing is bearish breakdown. Look at it, broke through this triangle. Ooh, ooh, ooh. And then you're like, I'm going to get short. And then you short it down here at 76.90. And then come the London fix here in about 3 hours, they start, you know, pushing some dollar selling through the market for month end. And next thing you know, that the Aussie's trading up at 77.30 and you're short at 77.10, and you're like, yeah, you know, it's just challenging is triangle resistance. and it's going to reverse, and then that those flows just continue, and next thing you know, it's trading up at 7, and then it breaks through this resistance, squeezes, not, starts squeezing the rest of the market out, and now you're sitting in a 60 pip loss going, oh my God, I cannot believe. And now you're talking on a Friday afternoon, you're stuck with a 60 pip loss, and you're sitting there with your hands in your pants going, what the fudge sickle just happened? Those are the types of situations that can happen on end of month, with flows. So just remember, if you find yourself on the wrong side, there's no shame in just taking off your trade and saying, okay, I made a mistake, I'm going to get out. But you can really get yourself in a pickle on a day like today. But also, hey, if you end up being on the wrong side of or right side of some flows, you can also do well too. So I get the wanting to take on some risk today, but just don't take on any exorbitant amount of risk. Try to control your risk, and if you're lost, if you find yourself in a loss, take it off and be smart about it. All right, Stelio, Steve, maybe any comments that you want?
Yes.
Hands in your pants.
Whoa, hey! All right, go ahead.
I wanted to add something. Having traded for a couple of banks, and being in a situation where a daily P&L swing of plus or minus 100K or less, I didn't even have to report. My boss said, "Don't report to me." Only if it's over 100K either way. I saw people take a lot of risk. And back then, remember, this was the early 80s or early 2000s. Sorry, I'm not that old. There was a guy in particular who was a Scandi trader. Scandi traders were not huge by default. The P&Ls were not huge. This guy was big.
Yeah, usually they're thin people from Scandinavia.
Yeah. And I remember pre-crisis, he made 100 million one year. Got paid very nicely, 5-6% of that, and then he got, he thought, yeah, I'm good and all that. The next year, he lost 350 million. And he lost his job, but obviously back then there were no clawbacks.
But he kept the 5-6%.
Exactly, there were no clawbacks, so he kept it. But people who are trading, with their own money, they're not trading for a bank. If you do that, if you take this amount of risk, you will blow up at some point. And what happens then? It's a very different story. So I understand, and one of my regrets is that I didn't take a little bit more risk when I was trading for the banks. I was very consistent, very steady. I kind of regret it now, but still, that was the way I traded. But I just want to say, keep risk controlled, because if you don't, eventually you're going to blow up. It's mathematically certain. Anyway,
I actually, I had a day trading operation in Dallas called Centerpoint Securities back in the late 90s through 2002. And I traded with some really, really good traders that traded on my floor. I was a partner there. And I've seen some guys just blow up like it's nobody's business, like hundreds of thousands of dollars gone within, weeks. And you're like, whoa, what happened to that dude? Like you just watch them blow up. I've physically just watched people just melt down in front of my eyes. And it's a sad thing. It really is. So, Steve, I know you had some probably comments.
And one of the worst things that can happen to people that are rather new in trading is start being naive and all, as we all are when we start, a new endeavor that you have absolutely no experience with, is start and get a few lucky wins in a row, and then they feel like, that's easy, they own everything. And, then they start leveraging extremely fast and they blow up immediately. So in my opinion, one of the best things that can happen to people that don't have the understanding to start, slowly and steadily, is to get a few losses to begin with, so they realize that the markets game is not like a video game, and it's not that once you've spent like 30 minutes playing a level, you've mastered it and you can now score high all the time. Unfortunately, it doesn't work like that.
Yeah.
Because the nature of markets is extremely fluid. Circumstances and conditions keep changing and evolving all the time. And if you don't evolve with them, you'll just find yourself, in a very, very, very bad spot.
True. And speaking of which, I actually know somebody that is probably more familiar with this than anybody out there who's going to be a guest today, who happens to be Justin, the principal of Forest Park FX. And I know, Dale, you're going to be interviewing him, and I think he's here. I'm assuming he's here right now. But what's that?
Okay. Yeah, I'm looking for Justin.
Oh,
he's here. He just wrote, let me promote him.
That was your cue. So let me go ahead and really quick before I bring in Justin. Well, I got to say this now that he's here, but you guys know that I say this every day. Hey guys, make sure if you like these webinars, visit our webinar sponsors. Pepperstone Securities. If you want to learn how to get ForexAnalytix for free for a few months, you can open a Pepperstone Securities account. If you're outside of the US or Canada, if you're inside the US or Canada, make sure you contact Forest Park FX. And you guys know I don't just say that because Justin's here, but he is here today, which is awesome. Justin's the principal at Forest Park FX, and you guys are going to hear it from him. But you guys know, go to the very bottom of this page. And you can get in touch with them with these two links right here where you can talk to them directly. And as I tell you guys every day, they're like the concierge of FX brokers. So make sure you talk with them. And now you guys get a chance to actually hear from Justin today. We're really excited to have him because he hasn't been a guest here on the Face webinar it's been a while, hasn't it been?
Yeah, many months.
Yeah. I mean, I want to say it's been at least 6 months. So, Justin, it's so good to have you here. And Dale, I'm going to let you take over and interview him. But we're going to be here. I think I need to throw this out there just because we were having this conversation. Justin, can you hear us?
I can. Can you hear me?
Yeah. Good morning. Good morning. How are you?
Hi, Justin.
I'm doing great. Good morning, guys. Thanks for having me.
It's so great to have you here. I'm gonna let Dale take over here in just 1 second, but I got to ask you this question since you are you're obviously you're like the how should I say this? Like I said, you're the concierge of brokers. You help individual traders find a brokerage firm that's best suited for their needs. And the one thing that I tell our guys and our traders every day is we love partnering with you guys for the last several years because you really hold traders' hands and really help them find a broker that's best suited for them. But the question I wanted to ask you, because we were having this talk about risk today, you probably are keenly aware of traders and probably have seen a lot of traders over the years that have taken on way too much risk as new traders. And what's been your experience with new traders in the industry as you've seen it? Is there a lot of how should we say blowing up going on?
It's a great question, and to your point, what we see from a lot of newer traders coming in is two things, and they're volatile when mixed together. One is mismanaged expectations about how easy this is going to be and how much money they're going to make in the early days. The other is a true lack of discipline or risk management to the way that they approach their trading. And you do see a lot of people take some very expensive lessons in the early days of their live trading. And you're the perfect case in point, Blake, in that you sort of grew up in this industry. You learned it in many ways the right way. You took your lumps when you had to, but it's a profession like anything else, right? I started my career as a lawyer. I went to law school. I practiced as an attorney. It took years of my life to get to a point where I was even marginally competent to actually represent a client, for example. This is no different. This is a profession like being a doctor or lawyer or anything else. It takes time, it takes experience, it takes discipline above all else, in my view. And there's really no substitute
you can't
for
read
that.
a book, Justin, how I made turn $10,000 into $1 million by Larry Williams,
you
and
can.
then
You're
open an account and be able to do it?
In my experience, no. Maybe there are a couple of savants out there that can make that happen. But there's no substitute for experience. There's no substitute for signing in and signing out every day and developing a routine that's tried and true, that's grounded in solid, repeatable principles. That's really the first thing that we see from newer traders where they kind of get into some trouble. The other thing, to your point, guys, you talk about traders taking big losses, is traders, especially newer traders, become married to a trade, right? You start out as a trader, the trade doesn't go your way, and then you become what I call an investor, where you're not going to get out of that trade no matter what happens. You're going to wait until it gets back to break even, because your ego simply won't allow you to take a loss. The way I look at trading, and maybe it's the same for you guys, is you have a thesis when you get into a trade, right? Certain stars align in a certain way and you go, I want to be long the euro here. But when that thesis breaks down, it's time to get out of that trade, because at that point you're not trading anymore, you're just hoping, and hoping isn't a strategy in my view. Right. But a lot of newer traders have tremendous difficulty in just taking a loss. And I wrote an article a couple of years ago called Cut Your Damn Losses, where we actually did a data mining of our traders to show that of all the open trades that traders were carrying longer than a week, the percentage of them that were down and the magnitude of those trades that were in the negative relative to the ones that were positive. It was overwhelmingly stacked with traders holding on to losing positions, letting them get worse and worse over time, letting the swap fees accrue just because they couldn't get off of a losing position when the thesis broke down. So those are some of the bigger issues we see.
And Justin, so guys, I can't express to you how important what Justin is, the information that Justin's given you. One of the benefits of Justin's point of view is that he sees it from above, kind of like God's view, if you will, looking down on everybody. And I'm saying that in a good way. You get to see everything. And from that point of view, it's like seeing a bird's eye view of everything that's going on. You will have your anomalies, and I'm sure you have, you will have your people like, look, I was an anomaly. I'll be the first one to admit it. When I was 26 years old, for me to make $750,000 literally in one day, because I was long GoToNet, GNET, on a stock that happened to gap up from $5 to $80, and I had like a 20-some thousand share position. For that to happen to somebody is pure luck. And so I was an anomaly, which fortunately kickstarted my career. And then, I went, but those are rare and it doesn't happen often. So, right. I mean, if you're looking at the norm and the average and probably the majority, the 98% of everybody else, they fall into these categories that Justin's talking about. So it's important that you take heed.
Justin, I have a question regarding crypto.
Sure.
And we had that situation during the crash where people couldn't get out of positions, they couldn't get money. Coinbase is not a regulated exchange. I don't believe there are any crypto exchanges regulated, yet aren't there some regulated firms that let you trade crypto as a CFD? And what would be the difference between these exchanges that are unregulated and trading with a regulated broker that offers CFDs?
Well, complicated question, and I don't want to point out a mistake, but firms like Coinbase, they are regulated exchanges. So Coinbase
by
in particular, by the CFTC. So Coinbase is what's called a money service business, and they've obtained money transmitter licenses in the various states in which they operate, which at this point in time is what one needs to be, at least stateside, to be a regulated crypto exchange.
Unlike an FCM or
correct. What basically what you have with crypto exchanges at this moment in time is you have trouble sort of putting them in a particular box. So we don't really know, are they just, the movement of money, or is it something more akin to like an FCM or an RFED, which would be a futures, or a Forex broker that would be regulated, where it's federalized. So right now, crypto exchanges, they go through a very basic federal registration as a money service business, but then you actually have to obtain licensing in every state in which you transact business, which is very different than futures and Forex brokers, where you just obtain your licensing at the federal level and then you're authorized to act in every state. So we'll likely see some pretty sweeping regulatory changes in the coming years with regard to crypto.
Okay.
But Coinbase is regulated in the way that they're supposed to be regulated at this time.
Okay.
With regard to crypto CFD trading, however, so you have regulated brokers outside of the US that are licensed and authorized to offer CFD products, contracts for difference. And basically, these are off-exchange derivatives of an on-exchange product like Bitcoin, for example, or oil or gold. The benefit of trading these types of products with a regulated broker as a CFD is really twofold. One is you get the benefit of what's called cross-margining, where you have all of these products that you can trade from one single account, right? So if you wanted to trade the underlying assets in the States, for example, if you wanted to trade FX, futures, stocks, options, and crypto, you would have to do that where each one is in their own separate trading account, and very often with a separate broker. Whereas when you trade the CFD products, you can trade all of those with one broker in the same account. That's the first benefit. The other is you can typically trade with more leverage than what's afforded you on exchange. So a lot of these regulated brokers that are offering crypto CFDs will offer you anywhere from 2 to 10 times leverage. So for those who really want to intraday trade, there's a great opportunity to take advantage of that and the additional buying power they give you.
And you know what I found, Justin, is because in my search of trading cryptos over the last few months, I didn't realize that a lot of these Forex brokers, it really only buy only. You can only go long, and there's very few brokers right now, especially in the being US based. There's very few brokers that offer like a leveraged product where you can trade on margin and be short crypto.
Well, we're seeing a bit of a liquidity crunch. So the brokers themselves have to figure out where are they getting their liquidity from. Yeah. And similar to offering like single share equity CFDs, if you want to go short Apple, you can typically go short Apple, but you actually need to obtain a borrow from either your broker or someone that they're connected with, because you just can't go outright short. You have to essentially be borrowing that stock from someone who holds it and then essentially trading the difference on the way down. So brokers are challenged with the same things right now in crypto, where they have to find relationships that will allow them to facilitate both long and short trading for underlying clients who don't actually hold the asset.
And I'm sure that's going to be more broad based as time goes along, of course.
Now, Justin, go ahead, Blake.
I was just going to say, I'll let you ask this question, Dale. But I know, Justin, you had a presentation that you wanted to show everybody.
Ask.
What's that? Dale?
That's what I was going to ask him.
Oh, okay. Go ahead. Go ahead.
No, that's all right. So you prepared something for us to see, Justin. You want to share the screen and
yeah, it's just a short presentation. Something I mentioned to Blake yesterday. It's a presentation that I think could be useful to both new and some veteran traders as well, about mistakes that we see.
I just you should be able to take the screen now as presenter, Justin.
Okay, let me.
I had to stop sharing.
Share my screen, and hopefully it will allow me to do this properly. I can expand to presentation mode. Are you guys seeing my PowerPoint?
No, we see Amazon. What are you buying there? Just kidding. Joking.
Is that my browser history? I was told that wouldn't show up.
No, we can see your presentation. Go ahead.
All right, very good. So So for everyone that's tuning in, this is a presentation that I put together some months back, and it's basically a compilation of the mistakes that we see newer traders make when choosing a broker. Unlike on exchange products, stocks and futures, for example, where everyone is trading the same product at the same price because it's part of a national market system. The choices of choosing one broker relative to another really differ only in the form of maybe the platform they offer, the service they provide, and the commission they charge. But the underlying product you're trading is the same no matter what broker you use. In FX, and when you're talking CFDs in particular as well, it's very, very different. We're talking about an over-the-counter market where we don't have a centralized repository where all the products are trading and clearing. We have an interbank market where each broker is aggregating pricing from various different liquidity providers, and they're offering you certain pricing models, certain execution models, platforms, and all various other factors that can make you make a good choice of broker or a bad choice of broker. And it's really important to just understand how to find the right broker for what you're looking to do. And this presentation is essentially the exact opposite. It's what are the mistakes that people are making when choosing a broker, and ultimately how can you avoid them. So I'll go through Blake and Dale. If you have any questions yourselves, if you receive any questions from people who are listening in, stop me. I'm happy to go off on a tangent and answer them mid-presentation. I'm very informal and very comfortable with the topic. So I just want to make sure that at the end of the day, we confer value and everyone can take something away that hopefully they can use and put into practice.
And appreciate that too. So guys, in the chat box, as we're moving along, if you have a question about what Justin's covering, make sure you write it there. Dale or myself or one of us will be, just reading the comments. So any comments that you guys might have, we can try to interrupt Justin as he's moving along. All right,
thanks.
I'll let you go.
No, sounds good. So here's the sort of industry standard risk disclaimer, and obviously we've spent quite a bit of time just since I joined the call talking about risk and risk management. But from our standpoint, and I'll talk about who and what Forest Park is. Our job and where we see a great deal of our value offering to clients is helping to de-risk the brokerage selection process as best we can. So who are we? Forest Park is a company that I started over 8 years ago. We are a regulated introducing broker. We're regulated here in the US with the NFA. We're also regulated in the UK with the FCA and passported throughout Europe. And I started this company with a particular mission in mind, which was to help traders navigate the minefield of finding suitable brokers. This was at a time when there were many, many more brokers. It was much more the Wild West, and you could really get yourself in trouble if you made the wrong decision. And there were a lot of introducing brokers out there at the time that were mere pass-through organizations or even firms that would actually mark up your cost of trading without really providing any value. And I just felt that there weren't any client-facing companies out there that were really advocating to protect the client. And so we felt that we could create a little niche for ourselves and put some goodwill out into the world. And that was really our mission behind the start of the company. And the way that we operate is we really try to get to know our clients. We want to understand what their objectives are, what their needs are. We want to understand their strategy. We want to take into account all the factors that go into a broker's decision, like products traded, number of trades per day, average size of trade, time of day, length of holding the trade, preferred platform, any third-party tools or technology that they're using, all sorts of things that, when you mix it all together can say, broker A is better than broker B, and I can articulate to you why. And our services really break down into the 4 key boxes that you see on the right. The first one, which I'll talk about in more depth later on, is we offer cashback rebates to all of our clients. So if you open an account through our introduction with one of the regulated and top brokers that we work with, we actually make it cheaper for you to trade with that broker than if you open that account directly. It's pure value add. There's no strings, there's no markups. It's just literally a lower cost of trading for you. But we start the relationship with our broker consultation, and that is where we take into account all of those various factors. And we want to understand what you're looking for and looking to accomplish. And from there, we'll be able to point you in a direction of 1 or 2 or 3 brokers that might be the most suitable for what you're looking to accomplish. We do have a very, very talented coding and programming services team as well. So if you have an interest in developing your own custom indicators or algorithms, we can help you to basically take what's in your head and put it into programmatic logic. For me, that's been very useful over the years because I can think of some things, but I have zero coding ability whatsoever. So I actually started this side of our business out of my own need, and then we started to offer it to traders. And last but really not least is ongoing service and support. You know, there are many ways to become frustrated and disenchanted with the trading world these days, right? It's no longer, Blake, you know, being in a gigantic trading room with 100 traders with you and you're talking shop every day at the water cooler. Everyone is, you know, basically isolated. Even before, you know, COVID times, you know, right? You go into your home office, you boot up your laptop or your desktop, and you're trading, and at best you're part of a virtual community like this, right?
Totally. That's been like one of the, you know, benefits of ForexAnalytix is our community. I mean, especially through COVID.
Right. I mean, this for most traders is as good as you will ever find anywhere in the world right now, because the industry has changed, and this type of service allows you to at least connect with people from all over the world looking at the market from different perspectives and lenses. But that's not available to everyone. And even if it is,
are you guys going back into the offices, Justin, with your business?
We are back in the office. Yes,
Isn't it great?
basically. It is great to be back. We still give employees the option at this point, but most have decided to go back into the office, which is great because there is a collaborative and collegial environment that was missed during the pandemic.
Well, I know Trent wants to get away from his baby. I mean,
Trent doesn't like working from home under any circumstances. This predates his kid. But it's nice to be back in the office. But from a service and support standpoint, in all seriousness, there are questions that come up. There's questions about your broker, your platform, a trade execution issue, a technology question. It's very hard to get straight answers. We are very client facing and high touch in that regard. So every client of ours, depending on who your account manager is, you'll have that person's email, direct office line, and cell phone. So I joke, all the same ways that my wife can yell at me, so can a client. But that's sort of our view towards this. Whereas if a client of ours has a problem, we have a problem. So we make ourselves available to provide ongoing service and support and help them work through those issues. And sometimes it's as easy as, you know, it's a little, you know, user error, if you will. We can talk them through it. But there are other times they're bigger issues, and instead of having the client, you know, sit on the phone waiting for a customer service rep to come to the line at a broker, or talking to some live chat representative in a third world country somewhere else, we can escalate those issues right away to the right person and get a faster and better resolution.
And I'm going to add here that I remember just God, it was maybe a few months ago, maybe about 6 months ago, sometime this fall or winter. Somebody in our chat room, in the ForexAnalytix chat room, obviously we've had a working relationship with Forest Park FX we're probably going on 5 years now, and a great relationship at that. But we had somebody in our chat room that was dealing with maybe IG Bank or one of the European brokers out there, and they were having some serious issues. And I said, hey, have you talked to Forest Park about this? And they're like, no, we didn't use them to get. I'm like, it doesn't matter. Reach out to Forest Park, since they're obviously our partners, and they'll see what they can do. And I remember one of your representatives really helped them out as far as getting answers. I can't remember exactly what the resolution was, but the great thing about Forest Park and what you guys do is you have relationships with pretty much everybody worldwide. So your span and who you can reach out to and who you can get on the phone to get somebody some assistance it's unparalleled. It's really awesome. So
well, we try and we work hard to build and maintain those relationships. So yeah, I mean that's part of our value proposition, is to be the voice and the advocate for traders, so that they're not, you know, just a tiny voice amongst tens of thousands of clients with a broker. We have, you know, large books of business with most of these brokers, and it gives us a bit of a megaphone, because they may not be so worried about an individual account, but they're worried about our relationship with them. And so we get much more attention and focus when we raise a complaint. And not to say that that happens often, but it's nice to know that you have that backing and support should it arise. So jumping back in to the 6 key mistakes that we see here. The first one is so obvious, and yet it's made by traders every single day, which is working with an unregulated broker. I can't stress how dangerous this is. We have seen this over the years countless times, where people either don't know they're working with an unregulated broker, or intentionally are seeking one out because they perceive the trading conditions to be so far superior to a regulated broker that they feel they have no choice but to work with such an unregulated firm. And it is a tremendous, tremendous risk to your capital, even if you're not necessarily doing anything wrong. You are essentially working with a firm that's positioned itself as what's, you know, quintessentially a bucket shop. Basically, they are actively working against their clients. They look at your deposit as their revenue, and you have virtually no oversight from any sort of regulatory body or business administration body to hold this broker's feet to the fire, to make sure that they have proper governance internally, that they have fair trade execution, that they have sufficient capital to operate their business. You are operating in the flimsiest environment possible. And if something goes wrong, and frankly, when something goes wrong, you have virtually no recourse. These are brokers that are set up in parts of the world that you can't point to on a map. They're owned by people in another country, and they're typically banking in another country. You have no chance of getting anything back. And we've seen this happen over and over again. In fact, one good example of this was several years ago. There was a broker called Talonex, which was, I believe, based out of Estonia, but regulated somewhere or set up somewhere else. And they were taking US traders. And at some point, the CFTC reached out to whatever country was hosting this brokerage and basically froze all the bank accounts. So even if you were, say, a European trader trading with this broker, which wouldn't necessarily be per se illegal, your funds were frozen because this broker was illegally taking US traders, if you will. So it's always, always, always important to just trade with a regulated broker. The regulation is there for your protection. It doesn't always feel like that. Sometimes the regulation is a bit overreaching, but at the end of the day, it is there specifically to protect the end trader. And the line that I always use is return of capital is far more important than return on capital. You want to make sure when you get started that your hard-earned money is coming back to you when you make a withdrawal. That's the first thing to get right.
That's a big one.
Yeah. The second one is, it's funny, I've been saying this long before the Trump administration and allegations of fake news and all of that, but fake news has been around a long time. Smear campaigns, a long time. We have a lot of experience with traders saying, I don't want to work with that broker. I want to work with broker XYZ because I read about them on this forum and they seem to be amazing. Then they'll say that, the broker you recommended is terrible. And I'll say, well, the broker I recommended has been around for 20 plus years. They're regulated in every major financial jurisdiction in the world. And half the time those firms are publicly traded. I said, do you think if they were running the criminal enterprises that you just read about online, that they would still be in operation? And rather you're going with the firm with 7 people located in, Bulgaria, that just started 6 months ago, and they're the perfect choice for your money. The problem is that these forums out there, some of them are good, and Blake and guys, I'm sure you've been quoted in them, you've probably done interviews with them at times, but to a great extent, they're unmoderated. And they also can be bought to an extent. So what you see is a lot of the underhanded tactics that exist, not just in this industry, but every industry, where you will have people taking advantage of unmoderated forums. They'll take advantage of the anonymity that the internet provides, and they will execute various smear campaigns to booster the credibility of their firm while destroying the credibility of their close competitors. And it's a very nasty business, but really the key is to look a little bit deeper. Don't follow blindly, think critically. When you're considering a broker, look at where they're based, look at where they're regulated, look at who the principals are, go check out their LinkedIn profiles. Do they have some real pedigree? Do they seem like they know what they're doing? Or are they hiding behind a veil of form fields and faceless, nameless organizations? Those are things that you can do and everyone can do to just be a little bit more certain as to who you're getting into bed with.
Kashif asked a question about, he goes, once you take a loss when you're trading, does it go to the bank or the broker, or how's that work? Because, in some of these situations you wonder, you're like, oh, well, I just took a loss, but a market is a market, right? But where's the broker making their money here?
It depends on the broker. It depends on the trader as well. And in particular, how those brokers are set up. I've got a slide on that I'll cover in a bit more detail in a moment.
Sounds
but there is a stigma around market makers and dealing desk brokers out there that they're always trading against you and you can't win if you work with them. And that's a misnomer. That's a misconception, because in trading anything, there's always a counterparty to your trade. Right? If I want to go and buy bananas from my supermarket, the supermarket's selling them to me. And in turn, the supermarket bought the bananas from the distributor and so on. There's always a counterparty to every transaction of every kind, right? So when you want to buy the euro, someone has to sell it to you. It may be the broker. It may be a liquidity provider that's aggregated by the broker. You don't always know that information, but that's not necessarily the driver and shouldn't be the driver of a decision-making process. It's really a function of, is the execution that you're getting from that counterparty quality? Are you getting the price you want at the time that you want it? Those are really the better questions to ask. And I'll cover that in a little bit.
That sounds good. And I'm going to let you go through. There's a couple questions on, how come there's very few U.S. brokers, but I'm going to let you get through this presentation.
Okay. Yep. I don't want to take up everyone's morning, so I'll keep going.
Okay.
So here's that slide actually that talks a little bit about this. But one of the mistakes that we see is traders just not understanding how brokers ultimately function. So I'll go through some highlights to give you some context. And then again, Blake, if there are questions you can ask. Okay. One of the major things that we see is, different pricing models. Typically, the pricing models fall into two categories. You have a raw spread plus a commission, which is like Pepperstone. I know you have a relationship with them. So Pepperstone offers two different pricing models. They have what they call a razor account, which is a raw spread plus commission. And they have a standard account, which is an all-in spread with no commission. It's important to understand under which circumstances those different pricing models can affect your trading, can affect how you will get into your trade, when you might hit a take profit or a stop loss. So it's important to understand those distinctions. Back to the execution question, I'm using some acronyms here, but NDD is a non-dealing desk broker, DD is a dealing desk broker, ECN is electronic communication network, STP is straight through processing, MM is a market maker. These are all different ways in which your broker might be facilitating your trade execution. There are differences and nuances to each of these. Some of them may be helpful to particular strategies, some may be harmful to particular strategies. The first thing you want to do is just try to understand them, or at least you could ask us or someone like yourself, Blake or Dale, to explain a little bit of this for clarity. But different execution styles will work better for different strategies, and that's something to keep in mind as well. The last key issue on this is really understanding regulation, understanding leverage and how margin works, so you don't end up in a situation where you can't take any more trades because you're at a margin. understanding how certain rules such as FIFO or hedging might impact your margin, might impact your ability to get in and out the way that you want. Again, these are all important considerations to understand about a broker you're considering and how it might affect your strategy. And I'm a big believer that that life is long, especially if you make poor decisions. So, in this case, just take the time to learn, to do a little bit of research or talk to people who have before you rush in and just choose a broker to make sure that you're taking into account the right pricing models, execution, and regulation to suit your trading needs. The next one here is using the wrong platform. So I love those interactions with traders who say that, well, I can only trade with this platform because my friend's neighbor's sister's dog walker's grandmother specifically trades with XYZ platform, and every other one is terrible. And it just makes me laugh because basically all the trading platforms in the world are about 98% the same. They're representations of data. They all typically have the same indicator functionality, and they all basically allow you to buy and sell and set stop losses and take profits and do basic charting functionality and so on. What we stress is that you want to put substance over form, in the fact that when you're using a trading platform, just like driving a car or using a personal computer, you just want to be fluent in it. You want to know how it works. You want to be able to navigate the screen quickly to find the chart, to find the button, to run the technical indicator that you want to use and see in your chart. Because if you don't have that fluency and if you're not comfortable with your platform, you're going to make mistakes, right? And in my household, I'm a PC guy. My wife is a Mac girl. I can't figure out how to get onto an internet browser using her computer. It just doesn't resonate with me. And so I use a PC because the way my mind is wired and the way that I logically think through a progression works because of how their operating system works. The same concept really applies to a trading platform. Don't necessarily go with what someone tells you should be using. Try them all out. They're all free. They're all available. Figure out what resonates the most with the way that your mind works, with how you're comfortable trading, and just stick with that. There's very few instances where you can only use one platform, and typically that's if you're using some sort of algorithmic code that's been specifically developed for just that platform. But outside of that, really any platform can work. It's just about finding the right one for you. The next mistake, and we're getting towards the end here, Blake, so I'll be able to take questions soon, is pairing a good strategy with a bad broker. This is sort of a putting it all together mistake, where you can have a strategy that works really, really well. It could be a swing strategy in large size. It could be a short-term strategy that scalps around the market. But if you don't fully understand the environment in which your type of trading strategy will thrive, you may end up trying to fit a round peg in a square hole. You don't want to do that. You want to basically say, if I'm trying to build a nursery garden in my backyard, I need to know what kind of water it needs, how much water, how much sunlight, when is a good time to put it out or not. There's different things that go into making something thrive and grow as well as possible. And you really need to know what it is that you're doing, what your strategy needs to succeed, and then take into all those other factors that we've talked about to try to create the most optimal environment for that strategy as possible. And again, that's tougher for newer traders because there are a lot of factors and they may not have experience with all that, but ultimately that's where, we say you don't have to figure it out alone. As we talked, there's not the same formal training that a lot of, prop traders had, or bank traders had coming out these days. A lot of people have to figure it out alone, and it's very, very difficult. There's a lot of noise out there. And really the brokers are not helpful because the brokers have biases, right? If I call up Oanda, and we love Oanda, we do a lot of business with them as a broker. But if I'm a prospective client and I ask, well, why should I trade with you as opposed to this broker? They've got this. The person on the other end of that phone is not going to talk up how great your competitor is. They're just going to point out all the flaws and try to get you to open an account with them. They're not giving you objective, agnostic advice. They're trying to win your business. So it's very hard to find objective resources. And again, that goes back to our original mission or tenet, which was to be broker agnostic, to help traders find the right fit for them, not the right fit for us. And that's why we work with multiple brokers, because we don't want to put a round peg in a square hole. We don't want to force a situation. We want to understand your needs, look at our menu of broker options, account types, and so on, and help you find the right broker fit for what you're looking to do. And so you don't have to go it alone if you don't want to. You can leverage our experience and our relationships and accelerate your learning curve, if you will, and avoid hopefully some costly mistakes. And that's, aside from the fact that we'll provide that ongoing service and support along with the rebates. And so, just a quick recap here. The first thing we try to do with all of our clients is understand their needs and help them get paired with the right broker for what they're looking to do. We don't disappear after that. We continue to be available for any questions or issues that arise, whether it's with that broker, that platform, or otherwise. We're pretty savvy and knowledgeable when it comes to all things trading these days. And we can be a great resource to traders who want to take advantage of that. And then lastly, again, helping traders save money on every trade that they place. I mean, this is a for-profit industry. So if we can help you to save some money, then let us do that. And here's just an infographic which explains how the rebate program works. It's available on our website at forestparkfx.com. But in short, there are no gimmicks, there are no hidden fees, there are no hidden costs. This is literally pure savings for you with virtually any broker that you're working with, as long as we have a relationship with them. But instead of just going to the broker to open the account directly, you would first come through our website and you would then open the account. We'll take you to the same application page, but you'll be tagged as coming through our introducing relationship. As a result of that, you'll have the same pricing, the same execution. We don't have any ability to interfere with your trades, but because we're the introducer, we do have the ability to service your account and help you with any issues that arise. And then the brokers compensate us for introducing your account in a form of either a portion of the spread or the commission that you pay. And again, there's no markups on that, so that you're still paying the exact same cost of trading as if you had a direct relationship. But part of our value add is out of the compensation we receive from the broker, we share that with you. And so this is basically what this infographic is explaining. And again, no hidden fees, no catches. It's literally pure value for you. In the US, and Blake, I know there's a question about why there's so few. Currently, there are 3 regulated FX brokers in the US. We work with all of them, Oanda, Forex.com, and IG. And then outside the US, there are really hundreds of brokers out there. We've been very, very selective over the years in who we work with, trying to really work with the best of the best, ones that have a history of being good actors, that are heavily regulated, reputable, well-capitalized, well-run. In pretty much all of these cases, I believe I've been to their headquarters and met the principals of the companies. So we've done a lot of due diligence to basically assure ourselves and protect our clients that these are good firms to work with.
And I wanted to mention, what in regards to the U.S., why there's so little, there's so very few options for those of us that live in the United States, and in a lot of cases Canada, is because of the fees that that the regulators here in the United States require the brokers to put up, right?
Yeah, it's extraordinarily expensive to be a regulated broker in the US and Canada. In the US in particular, you have to have a net capital requirement of $20 million. That's literally just $20 million that you've got to basically park in an account that you can't even use for your operations.
And so I want to mention that because when one of the reasons why I just so you guys, I have to give you guys a little bit of backstory here. When I was with MB Trading and I was, the chief currency strategist there, and then they were being acquired by TradeKing, then TradeKing to Ally Financial, I knew where this was going. Ally Financial was buying basically the brokerage business to, acquire the clients from they wanted to acquire just the client base. but they were going to ditch the FCM because they didn't want to put up $20 million. I knew where this was going. And I told the principal at MB Trading, I'm like, look, I need to make sure I've got something lined up for myself. I've got this idea of ForexAnalytix, blah, blah, blah. And I started ForexAnalytix at that time before I even started trading for the firm out of Florida, because they hadn't even approached me at that point. But I knew it was coming, because who wants to put up, and at that time, I think it was even more than 20 million. It was 20 or 25, maybe it was 20 at the time, $20 million to just put up as an FCM, to keep it in escrow and not use it, as Justin pointed out, not use it as operating anything. It just has to sit in escrow. No one wants to do that. And I knew they were just going to ditch the brokerage license as soon as they made the acquisition, and that they did, and they dissolved it. So, that's a lot of money, Justin.
It's a lot, and it only goes up as your assets on deposit grow too. So that's just the bare minimum.
Maybe that was it. It was going to be a lot more too on top of that.
So like firms like Oanda and Forex.com, which are the leaders stateside, I mean, I think they're up to like $60 million that they are required to just park in an account. They can't do it. So they can't use it for anything really. You don't have quite the same steep requirements outside the US, which is why you have many more brokers, which is why it's also that much more important to look deeper into who really is well capitalized and well run.
Exactly.
And so these are the brokers we work with. They're all terrific. They all have different value propositions in different ways. If people who are participating here have accounts with these brokers already, but are not part of our rebate program, we can typically work with them to accomplish that and get them to start saving money from this point forward, which is good. And that's all I got. That's my contact info. And
sorry, Justin.
Sorry.
No, sorry. So that's Justin. And Justin, anything else you want to say? Because I know Dale's got a couple questions queued up here.
No, I'm happy to take any questions, and I appreciate the opportunity to be here today.
Awesome. We're happy to have you here. Dale, did you want to go ahead and take it?
Well, some people are saying, Justin, that even regulated brokers, have violations. But even though they have violations, they're sanctioned for those violations, have to correct those violations. And, is there any guarantee, even though you're with a regulated broker, that if they went upside down, that you get your money back?
So it depends on the jurisdiction where you're operating. One of the reasons that so the U.S. does not have any sort of insurance or compensation scheme in the event that a broker were to become insolvent, which is why the net capital requirements are so high. Basically, it's there to guard against that, since there is no type of insurance fund. Additionally, it's very unlikely, even in the scenario where a broker might become undercapitalized, that a client would end up receiving pennies on the dollar for the capital that they have, because the going concern value of these brokers is tremendous. So as we saw with FXCM back in 2015, with the SMB depegging of the franc to the euro, they lost around $300-something million in about a minute as a firm, and it forced them to be undercapitalized per NFA requirements. And yet within 24 hours, they were able to secure a loan north of $300 million, because the going value concern of that business was so great that someone was more than happy that had the capital to put up that money and make the brokerage whole again, because they would make back that money and then some over time. And the same is really true for the brokers that you have now in the US. I mean, Forex.com was just acquired by FC Stone, which is a gigantic financial institution that's publicly traded. IG is publicly traded on the London Stock Exchange and extremely well capitalized. And Oanda is a privately held company that was just acquired a couple of years ago by a very large private equity firm out of Asia. And again, all of these firms are operating in every major financial jurisdiction in the world. So they are, goes beyond just the U.S. capitalization amounts. They are very, very well shored up as organizations, that the likelihood of that is really remote.
So is this capitalization amount a fraction of customer deposits or equal to?
It's a fraction of.
Okay, so if there is a problem, there's still of insolvency because of depegging of the Swiss, it still is possible for people not to get their money back. Like in the old days, Justin, I'm sure you remember things like Stotler. Being a member of a exchange, exchange members came to make people whole, to maintain the integrity of the CME, CBOT, right? So there's always risk of not getting your deposit back, even though they have this type of deposit on hold, correct?
It's a theoretical possibility. In reality,
okay.
it is not likely to recur.
It's never happened.
In FX, I don't believe it has happened. No.
Okay.
No.
Okay. And I have a tagline for you. That if your broker cannot see the forest from the trees, call Justin at Forest Park and it'll be a picnic.
I like that. Who said that?
That's Dale.
Oh,
Dale.
There's
put
a
that
tagline
together
for you.
I was moved by the words. I can't believe
well,
it.
You need a hanky?
I'm a little emotional right now. You can do our PR, Dale. That was
All right,
terrific.
buddy. Okay.
I appreciate that.
So it was great having you. Great having you come in. You want to wrap it with anything that, really, kind of sets you apart from a lot of other people that may also have relationships with other IBs. I think that the major thing is that, trust is something that only happens with the passing of time and performance during that time. And that's why we all love you here at ForexAnalytix.
I appreciate that. No, I'll just say, look, we are aligned with our clients. It's one of our core values. We did not want to be pitted against our clients and trying to make money at their expense. So we're positioned to be the trader's ally and advocate. And what we want to do is set everyone up for success, be there to support them as needed, and hopefully help each trader grow their own trading business. And in turn, our business will grow as a function of that. I mean, we are not a marketing firm. I haven't sent out an email blast in probably 4 years. We just grow through, the old-fashioned word of mouth. If we do a good job, relationships, people will share that, and hopefully our business will grow as a function of it.
And that's been the case with you guys. I've watched over the last several years. It's been pretty fun to watch, actually, from our point of view. Hey, Justin, I first and foremost, I want to thank you for being here today. I think this is a really important interview for people to hear, because they need to hear, who's on their side, especially when you're dealing with a broker. Because sometimes when, as a trader, you feel like you're alone. You feel like you're alone in this battle, and to know that they've got somebody like your company standing side to side with them, really fighting on their behalf it's reassuring. There was a question though that came in from Paul regarding FXCM and said, aren't they banned from the US? He obviously sees that you have FXCM as one of your brokers that you do recommend. Why is that? Because they're banned in the United States.
It's a good question. I'm very, very familiar with what happened here in the U.S. What transpired ultimately was a couple of key things. One was it was sort of the last straw between FXCM and the the NFA. It was a bit of an animus relationship that had grown worse over time, where you had a pioneer in the industry in Drew Niv as CEO of FXCM, really always pushing the envelope of what you could do under the regulations here. But in particular, the issue with what led to the ultimate banning of FXCM in the US had nothing to do with their handling of traders and trade execution. The underlying issue that gave rise to that suit was something that actually greatly benefited the trader at the end of the day. The traders got better trade execution than they would under other constructs as a function of the way that FXCM was operating. The issue stemmed more from the way that information was disclosed to various parties, primarily investors. And the pricing, execution, and trader experience with FXCM at all times was really among the best in the world, still is. So it was just an unfortunate situation where it was sort of the straw that broke the camel's back here in the US, where I believe the regulators saw it as an opportunity to get rid of FXCM, which had been a thorn in its side.
And I have to mention, just from because I was with MB Trading, and I know the principals at MB Trading, I was very much friends with, and I mean, I watched FXCM really push the envelope, as you using your words, but they really suffocated every FCM that was in the United States by always putting pressure on the regulators to up the amount of money that had to be put up at in escrow, because they knew that they had the most capital. So they kept going back to the regulators saying, hey, you need to raise the minimum requirement to 10 million. And then it was to 15 million. I watched them do it. And I had these conversations with the principals at MB Trading, and they're just like, dude, this is crazy. They're really squeezing out all the brokers in the US. And that's what they did.
Listen to this, Blake and Justin, a great testimonial by one of our attendees, viewers. I like the honesty of Forest Park. This is from Giark. They couldn't find a better broker for me, and were upfront about it. So there you go. How many people would say you're okay? You know, you don't have to do we can't find anything better for you than you already have. So, how many people will say that?
Yeah, well, we're not in the hard sell business, and don't want to be. So
I mean, that's a great testimonial as far as I'm concerned. That's really about integrity. So that's what this business, that's what you guys are all about. You live it, you breathe it, and then people that have dealt with you talk about it.
Yeah, well, same with you guys, and which is why it's been such a pleasure to work with the ForexAnalytix team over the years. Is the good guys should stick together, and hopefully can make that apparent to those who are trying to figure out who the good guys and the bad guys are.
Yeah, all we have to do is wear white hats, buddy. Right?
If it were that simple.
Yeah, and I have to mention that there's always, I mean, brokers. No one's going to have a perfect record. There's always going to be people that have issues and those types of things. And, especially if you've been around this business long enough, you've seen it. And look, I think one thing that everybody's got to be aware of is Forest Park gives you a lot of different options, and they're going to help, they're going to help guide you like, hey, this has been our experiences over here, and these have been our experiences over here. And I always tell people, as traders, we're different. I mean, the broker that's going to be right for me, swing trading the market, might be different for somebody else that's out there scalping the market, needs a little bit tighter spread, maybe even doesn't mind paying a commission because they're in and out like 40 times a day, where I might sit in a trade all week long and be only in 5 trades throughout the week. So we're going to need different types of services from different brokers, and I couldn't imagine there's anybody else that does that job better than you guys. So
I appreciate it, and I appreciate the time and everyone's attention today. And heading into a holiday weekend, wish everyone a nice long weekend for those that are able to enjoy it. And again, if I can help anyone that participated, you've got my contact information on screen, and would love to work with you. Love to help you save some money, and even if we can't, as you mentioned, Dale, we'll be upfront and honest about it.
Okay, great. All right, everyone. So wrapping up the week with someone that can help you. There's no cost in reaching out. If you have any seeds of doubt that you could do better and you're not getting rebates, whatever the issue is, reach out to Justin or Trent, and you won't be hanging on to a phone prompt saying, press 1, press 2. These guys are there for you. So, even to educate yourself about who you're with, if you want their opinion of it, give them a call. And Blake, great week. We laid it all out on the court for you guys again this week. It's our mission to build up and identify traders every day. I'm looking forward to a 3-day weekend. I went crazy on my birthday and had a beer last night, so I'm recovering. And we'll see everyone Monday. Tuesday,
wait a second,
right?
Dale. Wait a
Oh,
second.
okay.
First of all, thank you, Justin. And but second of all, in Europe they're not celebrating our Memorial Day. We're working on Monday, buddy. Sorry, just kidding. Nah, you guys have a great long weekend. He was like, no. All right, guys.
And then I have, in September, I have Rosh Hashanah and Yom Kippur.
I know. Oh boy.
Anyway, I like.
I think I'm Jewish too.
Yeah, you are, Blake. I'm looking forward to your
September.
Bar mitzvah. All right, everyone.
Thank you.
So remember, don't
Thanks,
just count your pips, count your blessings, and be grateful for something. Very hard to be depressed and grateful simultaneously. Try it. It won't work. So I'll see you guys.
All right. Be well, everyone. Thank you.